Alright everyone, welcome back to the channel for another Kadena update. So Kadena just dropped 12% in 1 hour. What on earth is happening? What's the next move for Kadena? What direction are we breaking? Price targets in the short term? Let's find out all of this and more. Well, let's start off with why Kadena's breaking down, why Bitcoin's breaking down, and why the stock market's breaking down. Very simply, we had our US core and US CPI inflation report that came out today. Now, core inflation, this was expected to have subsided by a decent amount. We were expecting a bullish CPI report from headline inflation and core, but core inflation went through the roof and headline inflation had not subsided as much as it was expected. So basically, we were expecting a bullish CPI report. This is why the markets were rallying for the past week, Bitcoin heading up, the stock market heading up. And as you can see, we didn't have that bullish CPI report, and now we are coming down and wiping out all of the gains that we've been making for Bitcoin, the stock market, and of course Kadena. Now what I want to do next is move on to a very specific last line in the sand that I see playing out in a few different technical analysis patterns. If we start off over on this chart over here, we're going to be predominantly focusing on the volume profiles. If we look on the left side of the screen, you can see the fixed volume profiles of the visible range. This is basically encompassing all of the data that Kadena has been traded at. And also here we do have the volume profiles of the visible range. Over on the left, the fixed volume profiles, they have slightly thicker volume profiles, so it's a tiny bit less accurate than the one on the right, but nonetheless, how we have these laid out is this is the next last line in the sand to the downside. This is $1.46. As you can see beneath there, over on the volume profiles, there isn't much volume traded. There hasn't been many bid orders, buy orders, etc. for Kadena down at these levels, so there is going to be a price gap. And this also does make sense because, you know, when you look at the higher time frames, you can see beneath where we are now, the only time that we spent trading around this area was 1 week that we literally just blasted up through and didn't really retest anything as support or resistance. And then over here you can see this was the blow off top, and we really didn't spend too much time trading back here in April of 2021. So we don't have volume traded beneath the floor that we're at right now. And also if we come over here, you can see we see this level once again over here, 146. What is this level from? Well, you can see this is the floor in terms of the candle body closes. We had multiple candle body closes down here in the past. Well, we had one about a week ago. We had one back over here, 13th of July. We had ones around about the 2nd, 3rd, 4th, 5th of July as well. We had candle body closes near this, but nonetheless, this is your last line in the sand. 146, we haven't closed the daily candle body close beneath this. If we do come down to this level, and in my opinion, I think we're going to be coming down here very, very quickly, and I'll let you know why. We'll be looking at the oscillators, talking about the direction of the trend in the immediate short term. But before we do that, you know, we talked about this level. This is your last line in the sand, 146. What happens if we break beneath this? Well, we're actually currently forming a bearish TA pattern, a head and shoulders. I'll let you know the price target of this. If we draw this down here, take this out of the log scale, and bada bing, bada boom. Let's say we break down in the next week. This will yield us with a price target down here at 40 cents. Now, if you're more of a fan of looking at this on a log scale, because it's a more believable price target when you do put this on a log, if you put this out, you can see this is round about 83 cents. And in my opinion, I think this is a much more viable target that we can keep our eyes on. Nonetheless, I'm not all too fussed about this pattern. I've presented many, many reasons. If you're a veteran of the channel, you would have seen on the daily time frame, we've actually got, we've got this big box down here between the levels of 108. There was a Fibonacci here. We've also got a Fibonacci, I believe it's your 1.236. It's from one of these. Or it might be from one of these. Yeah, you've got a 1.236 down here from this low, by the way, not from this low, obviously, because we went up higher. We've got 1.236s down here, and then you can also see there's more Fibonacci's down here. I won't go through all of these, but we've highlighted many, many reasons why we're probably going to bottom between the ranges of $1.08. I'm more of a fan of the $1. Like, I really don't see Kadena bottoming above $1. I think, you know, potentially we dip down 98 cents, 97 cents. That would be my most bullish bottom. But I personally think we're going to be coming down to the 80 cents. Like I said, we've got Fibonacci targets down here at 84. And what did we look at for here again? Was this 80, 86 or something? If we pull this back up, you can see the price target. I'll just redraw this again on a log scale. was pretty much the same. Yeah, 84, 86, I've probably fat fingered it a bit, but there's many reasons that I've highlighted, including even at the start of this video, outside of just today's TA. I mean, the majority of the volume traded, it makes sense for us to come down to $1. That's also a massive psychological level. Kadena, lower time frames, it's not looking too good. We've got a few bearish technicals playing out. You can also see, if I pull this up on the daily time frame over here, it looks like, you know, we've had this somewhat bear flag, bearish pennant that we've been talking about. It looks like it's kind of flipped this previous support as resistance. Now you can see a very clear pole all the way down here. And then what I like to look at this as is, this is the pole breakdown, and this data traded between this red box at the top and this white uptrending line of support. This is a bearish pennant, in my opinion. You can very clearly see a bearish pennant right here, and this makes a lot of sense because we had a move above this, and this makes sense. You know, this would be a deviation, this would be a failed move equals a fast move in the opposite direction. We came back for that retest, we failed the retest, and we massively plummeted. So once again, drawing this bearish pennant like this, yes, we did break up to the upside of this, but then you can explain this as a failed move equals a fast move in the opposite direction. And you tell me, since $2.60, now we're down here at $1.58, do you think we've had a fast move in the opposite direction? I would definitely argue that we'd have. So I would be looking at this as a bearish pennant. And what do you know, for the past 3 days we've been getting rejected on these upward on these uptrending levels of support. Now you can see I've actually got 2 uptrending levels of support. There's this red line down here which really just connects the wicks down here, but you can actually see we more or less rejected from the wicks rather than rejecting from these candle bodies that I've drawn out before. But I'm sure you can draw, there's probably a way to draw it. If I can't seem to grab onto this. If I draw this out here, so I'm drawing right at the bottom of these wicks over here, and then I'm actually encapsulating these candle body closes, you can see that this is rejected. So it's very subjective. You can draw this many different ways. Like I said, very ambiguous, but nonetheless, if we move on from this, you can also see we're losing support from all the volume profiles that we've been building up on the visible range for the past couple of months, really. I mean, we've been down here since the 11th of May, and we've been trading at the same prices. I mean, yes, we're experiencing a brutal capitulation today, but we're the exact same price as we were on the 11th of May. And if you are a veteran of the channel and you've been, you know, watching my Kadena updates, and you've gone from daily KDA updates to maybe an update every couple of weeks, this is why, you know, we've been at the same level for months and months and months. I don't want to just keep making the same video and regurgitating the same thoughts. I've told you what I think for the past 125 days. We're going sub below $1. I obviously don't want to just keep recording the same TA day in, day out, again and again and again. But I'll update you whenever I see these explosive moves happen, and whenever I see something coiling up for the immediate short term. And this is what I see coiling up for the short term, my friends. Once again, the price target we mentioned many times in this video, volume profiles down here, daily candle body closes. It would also make sense to return to this, as this is the neckline of the Head and Shoulders, 146. That is where we're coming to in the immediate short term. This means that as of the time of recording this, I'm expecting really within the next day, within the next 2-3 days, for us to come down another 8%. Now, if we do have a daily candle body close beneath 146, it's done. We're going to get clattered to the downside. And you can also see if we do draw out our Fibonacci's, let's see if there's going to be any lines of support up until then. I actually want to clear this up, make it very nice and simple. And first of all, let's look at this higher one. So from here to here, you can actually see a beautiful retest of the 0.5 macro breakdown. Then when we look from here to here, you can see we came right up to the 618 breakdown. One other thing that I would like to highlight, let's actually see, do we have a 786? So we're sitting on the 786 right now, 158. If you break beneath 158, you're going to get rocketed down to the level that I mentioned, 146. And I really never get tired of looking at this chart. If I just pull this back very quickly, I'll show you what I want to talk about to wrap up this video on. Bada bing, oops. Here we go. So this is when I started covering KDA, right here at $6.50. And I've mainly been talking about the trend, how the trend is your friend until the end, and how you can look at things like the daily EMA ribbons, which are constantly moving to the downside and the downtrend. You can use these to identify when a potential uptrend is going to be starting. And no uptrend has obviously presented itself. So since I've been covering KDA at 650, I've been letting you know, hey, it looks like we were getting rejected here. It looks like we're getting rejected at 345. You know, once again, 650 we were bearish. We were bearish over here at 440. We were bearish at 350. And every single time since then, we also highlighted this level down here, 247, when you pushed above the long-term moving average on the daily EMA ribbons. They flipped bullish, you came back for the retest, and you failed the retest. Ever since then, if we do zoom in to the price action on the daily time frame, once again, you can see we've broken down and come into the long-term moving average once again at 174. If we're just specifically looking at the times that we've gone to the long-term moving average, it's very far and few. We've only been above this twice, 240, and once again at this moment in time we went above it in the past couple of days, 175. We came up to it rather, not above it, and we got rejected. So it's very, very textbook in my opinion. The trend is continuing to move to the downside. We've got everything from bearish pennants, we've got lower lows and lower highs in the higher time frames. I mean, for example, it's really just easy to look at this and see every time that we have these big moves that everyone gets out of bed for, they're always lower highs, and we always continue to push to the downside after we do these. Also, if we do come over to Kadena, how it's performing against Bitcoin, you can see this is the BTC chart. It's been performing horribly against Bitcoin. So I don't need to deep dive into the TA in this. You can see the past year to date, the past year, past 3 months, past month. It's not been performing well against Bitcoin. So I think everyone's so, you know, they have to rush in now and they have to buy these altcoins now and they have to DCA all the way down since Kadena was, you know, what level was this up here? I was covering it at 650, but yeah, $25, $24 when it topped out. You know, these people have been telling you DCA, DCA, DCA the entire way down, and it just clearly hasn't been working out. So I would really argue, and I'm gonna potentially upload a video tomorrow on how I plan on catching the next uptrend on KDA using the Heikin-Ashi candles. But right now the uptrend is not there, the downtrend is still in place, and it really looks like we're solidifying the next move to the downside for KDA. And as promised, the oscillators, the weekly time frame, they're still breaking down. The MFI on the weekly is up at 43, so it's got a lot of room to break back down. The MACD on the weekly time frame, the histograms are starting to tick down, but this is very flat, so there is also over on the MACD lots of room to move down. The MACD on the daily time frame is just coming up to the heart line and only starting to break down, so once again lots of room to move down from there. The MFI money flow index is currently quite oversold. However, there has been many times in quite recent times where looking at Bitcoin and looking at KDA, this has been oversold and it has bounced back pretty hard, but it is something to take note of. I mean, at least since we bottomed over here, you can see when we do come down to these valuations of, you know, 7, 6, 10, we do get these bounces, but right now, I mean, the lowest we went to was 17, so I think we've got a bit more room to move to the downside, or probably a lot more room to move to the downside before we have our next lower time frame bounce. Daily time frame squeeze momentum indicator hasn't even yet ticked over bearish, once again indicative that there is lots of room to move down. MACD on the 4-hourly time frame is only just crossing bearish in the past 4 hours. It's above the heart line, which is meaning once again more room to move down. MFI, same story, up at 37, lots of room to move down. And MACD, oh sorry, not the MACD, the squeeze momentum indicator hasn't flipped bearish yet. So I'm expecting a lot of continuation to take place. When am I expecting Kadena to bottom? Well, I think Kadena is going to bottom very similar to when Bitcoin bottoms, but I actually think this is going to take place round about end of Q4/Q1, so I expect another couple of months of continuation to the downside. Expect more continuation to the downside for Bitcoin in the immediate short term. Bitcoin is going down to 19,200, but yeah, in the next day or two I definitely see us at 20,500. So that's what I see for Bitcoin, that's what I see for KDA. You should now know why is KDA breaking down, why the rest of the market's breaking down. My price targets in the short term, I think we're going to get that continuation. Once again, keep an eye on those levels that I mentioned in this video. Really, if you do come down to this daily candle body close level at, you know, that 145, 146, where, you know, there is that last line of support over on the volume profiles, you better hope we hold it. I think we're going to be losing it, but nonetheless, that's all I've got for you today, my friends. Keep an eye out for the next KDA update. As always, Cowboy out. Peace.